Central 21 Nova Cash Street in Newcastle. Back with you for our finance update for May. Where's the time gone?
Crazy, the year's gone.
Nick from Inovayt Finance joins us, talking the tough questions today, all about the interest rates and what does it mean to you and your bottom line. Where we at? Current fixed, variable, what are we seeing?
Variable hasn't moved at all really. We're still low twos for owner occupied, mid twos for investors if you're on the best rates. That's P&I, a bit higher for interest only, but still mostly sub 3% across the board for everything. Fixed rates, very, very big difference. That's, I think since 4 weeks ago when we did our last video, I think some banks we've seen 3 increases.
Wow.
So, 6 months ago, 8 months ago, we were low twos for fixed rates across the board for a lot of owner occupied and mid twos for investment mortgages, and now we're pretty much from 2 to 5 years, we're in the either high threes or in the 4s.
And that fixed interest rates tells us what the banks are foreseeing long term, isn't it? So
yeah. Essentially, like the fixed rate market is their forecast because they're locking in money now based on that period of time. So it's giving us a little bit of insight into what they think is going to happen.
Right. So break it down. $500,000 mortgage. You've increased by 2%.
Yep.
What's it going to cost on a weekly basis?
So say $500,000 mortgage, like you said, say you're 2.5% at the moment.
Yep.
Weekly repayments, 30-year term, you save $450 a week. That, if it went up by 2% to 4.5%, is looking around the $580 a week. So pretty significant jumps, you would say. And again, it's about people understanding. We're always in an interest rate market that changes. You have a loan for, most people on average, the last numbers I saw, have a loan for between 15 to 20 years.
Yep.
So you're going to see different cycles. And it's the question we're always asking people, are you prepared for change? What does your next 5 years look like? What happens if this changes? What happens if that changes? Changing the interest rates is no different to making sure that you're okay if you're going to have another child or your costs are going to change. It's just another thing you've got to budget for and be on top of.
There's the question. The budget.
The budget, which 9 out of 10 people don't do.
So, what do you need for a budget? You need to know your weekly rent. You need to know what you're paying your agent. What are your weekly agent's fees or monthly agent's fees? What are you budgeting for repairs and maintenance?
Exactly.
Do you have a budget for repairs and maintenance? Because there's things that are going to come up, whether it's a hot water system, whether it's minor repairs. Then your outgoings. What do you pay a year on your outgoings? Water, council, strata.
Yeah.
And then where's your flexible amount in there for interest rate changes?
Yeah. And then the other one we love to talk about, what about vacancies?
Well, that's right.
It's all these things that as we've spoken about numerous times over the last couple of years in these videos, interest rates dictate one of your biggest fixed costs as an investor.
That's it. And it's your biggest deduction outlay.
Exactly, from a taxation point of view as well. And yes, we've been in an amazing time period to really bring that down, and investors have probably benefited from that in a lot of ways. Now we've got to be more prepared than ever.
Yep.
Have we got the structure right? Have we got everything set up? Do we know what our other fixed costs are? What does this mean moving forward? Like we've just had a very high increase in rental yields as well, I'd imagine, in the last
so there is that bit of a buffer there for most landlords that rents have increased during this period of time.
Yeah.
But still, I ask the question to you out there, do you know what it costs to own your investment property?
Yeah, exactly. And I think there is, we've been banging on about this forever, but now is the most important time to not only review the loan, but review everything. Like, take a look at what the last couple of years have looked like from an R&M perspective.
Repairs and maintenance.
Repairs and maintenance. So, all other costs, like trying to make sure you're across it, because if we do have a little interest rate peak for the next 2 or 3 years, then
you want to know that you're not counting every dollar and cent and waiting for that rent to come in.
Yeah.
Because we just don't know when it may not come in.
Yeah, absolutely. And if you're planning to want to continue investing, then the more prepared you are now, the easier it's going to be. Because obviously the other thing is going to be, there's when interest rates start to increase, opportunities start to come out for future investment. People wanting to get out of the market based on fear and not being educated on what,
The property cycles do.
Exactly, this is a long-term game. So the investors that are prepared now are the ones that are going to, see opportunities come to them in the next 2 or 3 years.
That's some hard truths, but
Yeah, we like hard
this
truths.
month. But look, it's honest and it's real, and it's something you should know as an investor. So we pledge the question: what's your budget? Do you know your budget? Do you know what it costs to own your investment property? If you want to talk to either Nick or myself, we're happy to have the conversation to get you in the right stead to knowing what it costs to owning your investment property. And Nick's the best one to talk to about that. Your biggest cost, your interest, your bank loan, your...
Yeah, absolutely. Right now is the most important time, because as rates rise, the higher the rate you start with, the higher the rate you end with. So you need to make sure you're on as low as possible, even if it is variable, just to make sure that you're starting as low as possible now.
Giving you as much breathing space as possible. That's us for this month. The hard-hitting questions, the big budget, the increase in rates. We tell it as it is. We're not financial planners. We do not seek your own investment advice from your financial planner, because everyone's circumstances is different. It's an overview for you to take away and think about. I'm Casey Healey, Director here at Century 21. Nick Ball from Inovayt Finance. Thanks for joining us.
Thanks, Casey.
Bye.